horizon and your specific stock query. We also have Rajesh Agarwal, Head of Research, AUM Capital, with us. Now, Rajesh, let me come to you with the first question. Now, this is Chitra writing from Bangalore. She's been holding 5,000 shares of Maharashtra Bank at a price of 51.5 rupees for the last 10 months. She wants to know, should she book her profits or continue to hold for the longer term?
Good morning, everybody. As far as Bank of Maharashtra is concerned, we are very bullish on this, and we have given a buy call constantly on your show a number of times. And still, we believe that it's a long way to go. The fundamentals are very strong. From the last 3-4 quarters, the numbers have been improving. In fact, the numbers are, I would say, one of the best in the entire peer set. Be it deposits, be it advances, be it growth on every parameter. The asset quality is very good. They're moving into digitization and all. They have done a QIP for in the last few months. So everything is in their favor. And we have a target of almost around 70 odd rupees in the next 12 to 18 months. So if you're not in a hurry to book profit or you do not have any requirement of funds, I would say you can continue to hold. And even if your funds permit, one can even add to that.
All right. Depending on the time frame, from a longer term perspective, it's a hold call coming in now for Bank of Maharashtra. But let's move on to the next question. This is coming from Raj Agarwal, who's writing in from Bangalore. He says he has LIC Housing Finance, 50 shares. He's bought it at a buying price of 615 rupees. Can he hold it if it makes, does it make any sense to keep holding on to it? Let me come to your forum for this one. The levels to watch out for in LIC Housing and whether he should be holding it on. He's not given a time frame though. But say from a 6 months perspective, right now I see he's sitting at a loss. So perhaps if you see an up move, should he be holding on to it or should he just cut his losses now?
So since the stock price has already seen quite a steep decline from levels of 640 since last month, and it's come and halted near 560 levels. And at 560 currently, we can see from the past couple of days, the stock price has been holding up to those levels. So a crucial level of support can be determined around 560. So any breakdown from those levels can be considered a clear exit immediately. Because we don't know the holding period, so it's better to reduce the losses and maintain a stop loss. Well, on the upside, the stock price remains under pressure because it is moving below multiple moving averages of 50, 100 as well as 200. So it doesn't indicate that it has, we can expect some good upside momentum. So from a broader perspective, like even from a 6-month perspective, I would suggest that even if the stock rebounds towards the levels of 600 to 610, he can consider switching from the stock.
So that's the view on LIC Housing. They could consider switching. But moving on, we have a query on the defense pack. Now, Forum, let me come to you for this one. The viewer hasn't given the time frame that he wishes to hold the stock for. This is Venu writing from Chennai. He's a senior citizen. He wants to know whether HAL is a good buy at the current levels. He's already holding 50 shares at a price of 4,500 rupees. So he wants to know whether he should add more at the current levels and what are the next targets that we are looking at as far as HAL is concerned.
Assuming that HAL or some of these defense stocks can be considered more from an investment or a long-term perspective. So, the stock price has seen quite a volatile move in the past, I would say 1 year, like from levels of 5,600, it came down to 3,000. And since then, it has seen a good recovery and holding up or consolidating near these 4,400 levels. So, it's at a crucial juncture. So, since he has been holding on to it, he can look for it from an investment perspective to continue holding. Adding currently doesn't signify as far as the indicators are concerned. I would suggest that one can look for lower levels of 4,300 to nearly 4,200, which is like a base formation or a support level. So to add in or accumulate. So currently he can hold on to it. As far as the targets are concerned, that even from at least a 2-year horizon, I'm expecting the stock price to move towards its previous highs of 5,500 to 5,600. The volumes don't say much. So clearly, and currently it's clearly to hold on to it. Adding it at lower levels is advisable.
All right. So currently at lower levels, it is advisable to hold HAL probably from a long-term perspective. But moving to the next question, this is Ashok who's writing in from Bengaluru. He says he has ABB. He's bought it at a buying price of 5,762. Clearly, he's sitting at a loss. he wants to know whether he should add more to the existing position, or should he be waiting for one more year perhaps to recover his losses. Rajesh, what would be your view on ABB?
See, we have very strong positive views on the entire CapEx space, be it EBB, be it Siemens or Cummins or the likes. The last 1 year or so has been a rather slow down period for the capex as such, but going forward, as we have heard L&T head Mr. Subramaniam saying day before yesterday that capex has started ticking up, and that's a good sign for the entire industry as such. We also believe that the government capex has started taking up. Private capex is just a matter of time that it starts taking up. Balance sheet is very strong. They have good order book. One can continue to hold. Even one can even add if one has a time period of 12 to 18 months.
Yeah, Rajesh, but speaking of which, speaking of the capex, because of the GST overhaul that's come in, we are penciling in that the capex, the infra counters might get affected because that might slow down. What would be your view then? And also with ABB, the results weren't that great. Of course, L&T came out with good set of numbers. Would your stance change post that? Rajesh? Rajesh, can you hear us? Okay, I think we seem to have lost Rajesh. But let's move on then. Forum, I'll come to you with a question then. This one's coming in from Venkat Ramani from Bangalore. He says he has Ambuja Cement 600 shares. He's bought it at a buying price of 486 per share. Now the government has reduced the GST and it makes sense to buy more, or any other cement company that you would be bullish on, and he wants to hold it for the next 1 year.
So first, in particular about Ambuja Cements, the stock price has been consistently moving up after forming a good base formation near 480 levels. This is more from a broader perspective. So since he is looking at holding for 1 year, he can continue to look at Ambuja Cements. In fact, if the stock price has to come down a little lower towards 565 to 560, he can consider even accumulating for a time horizon of 1 year, or maybe a little longer than that, of 1.5 years. So eventually, for a potential upside target of almost 650 to nearly around 680, it looks quite attractive at these levels. So I think he can stick around with
our experts. So let's get back to all the queries then. Now this query again is on the defense pack. Rajesh, now let me come to you for this one. This is Venkat Rao writing from Vishakhapatnam. He wants to know what are the correct entry levels for BEL and BEML. He wants to hold these two stocks for a period of about 1 year.
See, pointing out entry levels in fundamentals are a real tough job, because that's best done by technical analysts like Forum. She would be a better person to say about levels. What I can talk about is fundamentals. I think the fundamentals are very strong, going by the fact that the kind of geopolitical tensions going across the world, the kind of order book these companies have, the kind of focus of Indian government on indigenization of defense, and not only the domestic order book, they are even exporting products to other countries. So prospects are for the long term is very good. Taking one by one, Bharat Electronics is a strong company in defense space. One can go ahead with their buying at these levels it's trading around 375, 378 odd levels, for a target of maybe 20-25% upside in the next 1 year. As far as BEML is concerned, it's not only a defense play, but even it is into mining equipments and metro coaches and all. And all the three divisions are doing extremely well with strong order book. Yes, at this point of time, the valuation might seem a little bit stretched. But when you're talking of a time horizon of 1 and 1.5 year down the line, and with the kind of prospects going forward, I think both these companies are a good buy in one's long-term portfolio.
All right, so that's the view coming in on the defense pack, BEML and BEL. But let's move on to the realty pack now. This is Balan who's writing in. He says he has Godrej Properties. He's bought at levels of 2,400. He wants to know if he should continue holding on to it or shift to a different name, to Brigade Enterprise. For him, as far as the Nifty Realty pack is concerned, that has been underperforming. In fact, in the last 1 month, it has seen quite a bit of a dropping, almost 10% down. Godrej Properties is again an underperformer. So should he be probably cutting his losses and entering a Brigade, or actually he's sitting at a profit as of now. So should he really book his profits and enter Brigade, or should he hold on to his Godrej properties?
Well, first, as you rightly made a mention, that Nifty Realty as an index only has seen a very steep decline in the past, I would say a month or so, and as a 10% decline from the highs of around 1009 on the index front. Now, when you first talk about Godrej properties, of course, along with the realty space overall as an index, the stock also in particularly has seen a steep decline from the levels of 2400 onwards. Now, currently, the stock price on a weekly chart has been trying to hold up or is now finding its space near 1950. Now, technically speaking, in the month of Feb or even March as well as April, the stock price was holding up to those levels. It respected as 1950 levels or 1870 approximately. I'm giving a support zone. So from there, we have seen a good rebound. So currently also, I think he should continue to hold on to it because on a weekly chart, it has taken support in the last week and now is showing a very stable early signs of stabilizing. So it's clearly a hold. However, any closing below those levels of 1865 can be considered to move or switch from the stock. In particular, as Brigade Enterprise is concerned, I think he can wait for a rebound towards 1050 to consider switching or squaring off his position.
So a hold call for Godrej Properties, and you should likely wait for a rebound when it comes to Brigade Enterprises. But moving on to another query, Rajesh, let me come to you for this one. The viewer Swati, she wants to know your view on NHPC and REC. She has about 5% profit in NHPC and 10% loss in REC at this juncture. She wants to know what should she do. She wants to hold these stocks for a period of 2 years.
See, I think at this point of time, valuation of NHPC is almost on an optimum level, and it's better to profit in NHPC. As far as REC is concerned, it has strong fundamentals, trading at good valuations, giving out good dividends, and with the kind of new regulation about infrastructure financing and all, I think REC and PFC are on a strong footing. With the kind of correction they have witnessed in the recent past, I think they are good buys at these levels if somebody is looking for a time horizon of 18 to 12, 24 months. So it's a buy from a side, both of these, REFC and PFC, provided one has a long-term view.
All right, moving on then to the next question. This is Nagkumar who's writing in from Hyderabad. He says he has 2,000 shares of ITC that he's purchased at 400 rupees. He says, can I hold it for the next 2 years? With the recent GST overhaul, he says that cigarettes are going to become expensive. Also, would it be worth holding this share in that case? And can he get an average of 10% return per annum? Rajesh, let me come to you for this one. ITC, it's a good question because, all the sales good, the tax is likely to be around 40% and it's likely to get more expensive. It's likely to remain expensive. What would be your take on ITC then?
It's a buy up from our side, and I have been giving a buy call on ET now only from 150 odd rupees, and still it's a buy. The recent news of GST hikes, sin tax, and all those things going forward, I don't think the consumption of cigarettes or anything else is going to go down because whoever is smoking is going to smoke, whether it is in 2 rupees or 5 rupees per cigarette. So that's a different point of view. That won't drop down consumption. Yes, somebody might go from premium cigarettes to a lower brand, but that's a different story. Going forward, ITC, we have seen volumes going up in the cigarette business, FMCG business doing well. There's strong balance sheet, cash positive, I would say. They are giving out good dividends every year. Everything is in their favor. It's a buy from a side. They're moving into dairy business too. So at these levels, I think somebody looking for a long-term horizon at 10% return per year, it's a very decent expectation. I would say it might give even higher than that because dividend itself is 5-6%. So continue to hold. You can even add to this.
So Rajesh, will stay with you. I wanted to understand, the viewer wants, Siva writing to us. He wants to know your view on the IT pack. Now, this person wants to hold KPIT Tech and Persistent Systems for a period of 2 years. Do you think he should buy at the current levels?
There are a lot of clouds on IT pack as a whole because of Trump tariffs and all those things, people talking of slowdown and all those things. But what I personally believe is that the kind of correction these stocks have seen in the last 2-3 quarters, all negatives have almost been discounted if somebody is looking for a longer period to hold. So yes, these are good hold for long-term horizon. They are doing very well, especially KPIT and Persistent, the gentleman, the stock which the gentleman has asked. Both of them are doing very well. Persistent in itself is doing well in product designing and all. KPIT is into auto software. Both have good long-term prospects. KPIT one can even add at these levels for a target of maybe 1400, 1500 in the next 9 to 12 months. But for longer term horizon, there might be longer, higher targets too.
All right, so that's the view on the IT pack. But let me come to you now, Forum. This is Sudha who's writing in. She says, what would be your advice on the entry price for Avenue Supermart and Phenolix cables? Firstly, are these two counters a good bet from, say, a 1 year perspective, and what should be the right entry levels for them?
Well, to start off with Avenue Supermarts, now the stock price has seen a very good stellar run in the past few trading sessions. Maybe in the 5 to 6 trading sessions, the stock price moved from levels of 4,100 to nearly 4,600. So that's a very good run, or I would say a good momentum stock. However, for entry, she may have to wait for lower levels towards 4,450 because already the stock price has seen a steep up move. So entry levels, entering at current levels would just invite more of risk. So it is advisable to wait for her, but definitely she can get into Avenue Supermarts and she can maintain a trailing stop or rather a stop loss below the levels of 4,300 and expect a potential up move towards the levels of around 4,840. And as far as Phenolix cable is concerned, that currently it's just trying to take support near its previous lows in the month of March. It had formed a low closer to 760. So it's trying to move back to those levels and find a base. So currently, technically speaking, it's not yet indicating a buy, but any weekly closing above 900 would trigger some bullishness. But at the moment, I think Avenue Supermarts looks far better.
That is Avenue Supermarts looks far better right now. That's the view coming in. But moving on, Rajesh, let me come to you for this one. This is a more broad-based query. This is PV and Rao writing from Hyderabad. He wants to know if you could suggest a few mid-cap or small-cap stocks that one could look at investing in for the long term. What would your preferred picks be?
See, at this point of time, I think one can have a look at IRCTC. That's doing very well, and it has not done anything in the last few quarters or so, despite having strong balance sheet. Monopoly business of ticketing, rail near, and catering, tourism division is also doing well. One can have a look of auto ancillary companies like Talbros Auto or FEM Industry, even Motherson Sumi for that matter. In defense, as we talked about BEML, these are good picks. In chemicals, one can have a look of Himadri Chemicals, Himadri Specialty Chemicals. So these are some of the names one can have a look at.
All right, so these are the stocks one can perhaps look at. But let's move on to the next question. This is Bharatwaj, who's writing from Coimbatore. He says he has 370 shares of Varun Beverages at a buying price of 633. Can he add more at the current price? And he's waiting to, he's actually wanting to hold it for the next 2 to 4 years perspective. Firstly, Forum, can he average at current levels? And from a 2 to 4 years perspective, I know that's quite a timeline. But on the charts, what do you see for Varun?
Well, so for adding, he can consider levels of around 495 to around 490 levels. So that's just marginally like around 12 to around 13 points lower from the current market price. Now, currently the stock price from a short-term perspective has been consolidating. As far as he's looking at holding for nearly 2 years, he can consider, that is the reason why I'm suggesting that he can accumulate. So the strong support levels from a long-term perspective remains at around 450. And from a 2 year horizon, he can look for the stock price to move back to levels of around 620 to nearly 630. That is very close to its previous highs or resistance levels. So I think these levels are good enough for him to accumulate as well.
We could look at levels of 630 as far as Varun Beverages is concerned. But Rajesh, let me come to you. Can you also help us with the fundamental take on Varun Beverages? How are the fundamentals looking? Because we have another query from Vansh, who's writing from Mumbai. He's a 21-year-old. Right now, he has 45 shares of Varun Beverages. He wants to hold them for a very long period, that is 5 to 8 years. So do you think it's a good idea to do that? How are the fundamentals looking for Varun Beverages?
this point of time, fundamentals are very strong. They're the largest bottler of Pepsi outside US. Not only in Indian markets, but they operate into Nepal, Sri Lanka, and neighboring countries, doing very well. They have launched a lot of non-carbonated products also, and that has been taken very well by the market, expanding their capacity for increased consumption and all. This quarter numbers may be a tad uh, lower because of smaller summer period. The monsoon started early, but going forward, I think this has got a strong prospects going forward. The only issue at this point of time in a short time period would be the higher GST or a sin tax, which the government is planning. I don't know whether that would come into Varun too. But otherwise, the fundamentals are very strong. If that comes, I think there would be a temporary blip for a short term. But for longer term horizon, it's a good hold. Any fall for around 470, 480 odd levels would be a good buying levels.
Our number is flashing on top of your screen. Keep sending in your questions and we'll get them answered by our experts. Let's resume with all their stock queries then. Moving on to the next question that's coming in. We have, there's no name again, but this question is for Maruti. 25 shares bought at a buying price of 11,000 rupees. What should be the medium-term target? Forum, let me come to you. Maruti, what are the levels to watch out for?
Well, as the whole entire Nifty auto space, the index has been also doing well today, and we particularly Maruti exceptionally performed well yesterday, and even today it's just consolidating along with the Nifty, very much in line. So from a medium-term perspective, it does look a good hold even right now, and one can even look for a target of closer to almost 14,400 initially, and then closer to around 14,700. Since there is a very big gap up opening, in the beginning of this week, so he can maintain a stop loss below the levels of around 13,600 levels and look at holding on from a medium term perspective.
Okay, so that's the view on Maruti. But moving on, Rajesh, let me come to you for this one. Ram Kumar is writing to us from Chennai. He wants your opinion on SBI. He wants to know, should he enter at the current levels in SBI for a long-term holding? And if not, could you suggest a long-term bet as he is looking to invest about 35,000 rupees for the long term?
Add SBI. It's a very good stock. It's the largest PSU bank in our country with full number of branches doing very well. The numbers have been good and IMs have improved. And with the kind of steps taken by RBI, it's just a matter of time when a great uptick starts taking place. If you look at the asset quality is improved. The YONO app is doing very well. The subsidiaries are doing well. Sometimes back, the FM has came out with a statement that all the PSUs need to monetize their subsidiaries, and that's a strong trigger for banks like SBI. So all in all, everything is in favor of SBI. I think it's a buy at these levels for a target of 4 figures in the next 1 year or so. So if you have funds, you can add SBI.
Add SBI, and SBI is a good hold for the longer term. But let's move on to the next question. This is coming from Ranjan, who's writing in from Bangalore. He says he holds 256 shares of TCS. What should he do with it? Can he hold for another year if things really turn around? Forum, let me come to you for this one. On the charts, how does TCS look like? Because on fundamentals, of course, we all know that the IT pack is really under pressure, and there are headwinds, at least for now, for the IT pack. But on the charts for the next 1 year, what do you see for TCS?
As the fundamentals have been suggesting similar on the technical front as well. So one is the chart does suggest that there is weakness, but now there is a very slight positive divergence that's probably from a near-term perspective and not yet from the long-term view. So I would suggest that in case there is any kind of rebound towards the levels of 3,270 to around 3,300, he can consider switching from the stock. Overall, the trend remains weak. It is moving below the multiple moving averages of 50, 100 or 200, not only on daily but on weekly charts. So clearly, this chart does look weak, and any kind of rebound should be considered to reduce the position or switch from the stock currently. And only if there are some bullish triggers fundamentally along with that, it should reflect on the charts as well, would trigger a buy, but otherwise so far not indicating a buy or a hold.
All right, so that's the view on TCS. But Forum, let me come to you again. We already had Rajesh's view on the defense pack. Now, this is a viewer has 100 shares of HAL again at a price of 4,000 rupees. They want to know whether they should book profits at the current rate. What would you suggest? Should they book profits or they continue to hold for a slightly more time for more upside to come?
Technically, when earlier also we had this query on the same stock, so I would suggest that continue to hold on to it and maintain a very strict stop loss below the levels of 4250, and can continue to hold on for at least another year or two when he can get better levels to even book profits. So the potential up move from even the first target can be targeted towards the levels of 5,000, where he can consider reducing or booking profits and hold on to the balance quantity. I wouldn't suggest to book complete profits also, but from a long-term perspective, it remains a hold. So partial profit booking is a strategy that he can follow at higher levels.
All right, so that's the view coming in. But let's move on then. The next question is coming from, okay, there is no name here. Oh, this is Poonam who's writing in. She's writing in about ABFRL. She says she's bought 300 shares at a buying price of 81 rupees. So clearly now, right now she's sitting at a loss. Let me come to you, Rajesh. ABFRL, though she's not really asked a question specifically, but I'm assuming she wants to know what's on the cards for ABFRL, especially with the GST reduction. For all these textile and clothing companies, it's going to be a big positive. So for ABFRL, what do you pencil in, say, for the next 1 year?
See, the Prime Minister's speech on 15th August clearly said that to increase consumption, there would be a rejig of GST slabs too. But as far as ABFRL is concerned, I think although the consumption would go up, the sales might go up, but the numbers are not that great. The margins are on the lower side. And I believe that any upsides should be taken as an opportunity to exit the stock. So it's a sell from our side. Wait for maybe a levels of 80, 82. At that levels, exit.
All right, so that's the view on ABFRL. But moving on, Forum, now let me come to you. This viewer, Nalini, she's writing from Chennai. She's been holding Praj Industries for a long time. She bought it at a price of 235 rupees. So she wants to know at this juncture, should she continue to hold or sell to book profits? What are the targets that you would suggest?
Well, actually, Praj Industries has turned quite weak. In fact, last year in December, the stock price was doing extremely well, but it formed a bottom at around it formed a top at around levels of around 875. And since then, the stock price has been in a clear declining zone. So I would suggest that she should consider booking profits at a level of closer to 450. So currently the stock price is 410 and expected to see a bit of small rebound towards the levels of 450 where she can consider booking profits.
All right, so that's a view on Praj Industries. But Forum, I'll stick with you because this person, Sally Devi, wants the entry levels for Siemens. What would be the right price to enter Siemens?
Well, Siemens, I think, I don't know the time horizon though, but currently stock price remains in a very consolidated range, and it has been hovering between multiple moving averages, technically speaking. So I think the entry level should be closer to around 3,050 to around 3,060 with a very strict stop loss below the levels of 2,959 and can look for a potential up move towards the levels of 3,350.
So those are the levels to track as far as Siemens is concerned. But moving on, we have a query coming from Dikshita. Rajesh, let me come to you for this one. She wants to know which semiconductor stock, related stock, could she add for the long term? Which are your preferred picks?
See, at this point of time, the stocks which are listed in the semiconductor space are not that great on fundamentals as such. So at this point of time, we are avoiding almost all, except for the likes of one or two, but then the valuations are very stretched. So I would wait for some amount of correction, maybe in Keynes Technology, for maybe around 10% correction from these levels to enter. So at this point of time, it's an avoid.
All right, so avoid for now on the semiconductor names, but let's move on. This is Mahalakshmi who's writing in. Again, she's writing in on TCS, but we have already spoken about TCS. But Rajesh, we have not come to you for your view. We've taken a fundamental check for TCS, and also she wants to know if I can add further exposure to IT portfolio, which is now 13% of my total investment. Rajesh, would this be a sensible thing to do to increase the exposure to IT, because clearly IT has been seeing headwinds, and at least for the near-term view, that seems to be muted.
See, I totally agree with you that the near-term view is muted, and so there's no point putting new money in this sector, despite the fact that the valuation looks very attractive. The balance sheets are strong, they have strong order book, and going forward, maybe in the next 12 to 18 months, things would be clear and they will start performing. But you are having a loss of opportunity when putting money in these stocks which are not doing too well and are not expected to do well in the near future. So if you have a long-term horizon, by long-term I mean very long-term of 12 to 18 months or even higher, then these stocks like TCS, Infosys are good bets. They are clearly on the base of their balance sheet and the kind of execution capacity they are moving into cloud and AI, ML. So these things are good for a long-term horizon, but don't expect anything miraculous to happen in the short term. So if you're a long-term horizon, go for TCS or Infosys, or rather at this point of time, I would say move to some other sectors. Maybe a PSU banking space would be a better choice to be.
So I call for TCS and Infosys for the longer term, but otherwise for the short-term benefit, you could look at shifting to some other sectors. But moving on now, we have another query coming from Zenith, who's writing to us from Ranchi. She has 1,200 shares of NBCC at a price of 103 rupees. She wants to know what should she do at this current juncture with NBCC, and she's looking to invest in Castrol India. Is it a good bet for him? What's your view here?
Well, to begin with NBCC, actually, she can continue to hold on to it. It has been taking support near these levels of 103 itself. So she can expect from a positional or an intermediate perspective also the stock price to move back to levels of around 112 to 114, where she can consider booking some profits. Meanwhile, in Castrol India, I think it's yet too soon to say as a buy. I would yet consider waiting the stock price to give a good closing above 212 on a weekly basis to consider it a buy. So I think holding on to NBCC would make sense.
All right. So that's the view on NBCC. But Rajesh, let me come to you for this question. This is K. Narayana, who's writing in from Barangal. He says he has 100 shares of Garden Reach. He's bought it at the buying price of 1,500, and 100 shares of Cochin Shipyard. He's bought it at 1,400 rupees. What should he do? Should he be booking his profits, or should he wait for a longer period of time? So he's not given the time horizon, and clearly all the defense names, they have run up a lot. And from a longer term perspective, all these counters, of course, are a good hold. But since there is no holding period that's mentioned, should he really book his profits, or should he be holding on to it?
See, if you have a time horizon of 12 to 18 months or even higher, you can continue to hold, even add to these names. They have good order books, good execution capacity. New orders are coming in. Cochin is having an order book of 22,000 crore at that point of time. They have tied up with a company for international business too. So both of these companies in the shipyard business is looking extremely well to us, and we have a buy call on both of them. So if you have a time horizon of longer time horizon, you can add to these names.
View on Cochin Shipyard and Garden Reach. But with that, that's all the time we had for Buy Now, Sell Now. We'll take more of your queries tomorrow. Ankita and I will take your leave, but don't go anywhere, as Markets at Noon will take all the action forward.